Okay, all welcome to the WheresSpot virtual event. We do these every once in a while. This is what we're calling, am I an employee or am I an independent contractor? This is an issue that has come up on WheresSpot probably about every 3 weeks or 2 weeks even. Uh, it seems like, by the way, I'm going to ask everybody to be on mute while we do this, and we'll unmute at the end for questions. But this question is fraught. It's fraught because for those of us who've been in the business for a long time, we've gotten away with doing it various different ways. When I started in the business a few years ago, nobody was an employee. Everybody was a quote unquote freelancer. They invoiced, and we all got away with that until we did not. And the federal government came down and said, you're an employee. What does that mean? How does that work? Is it true for everybody? This has been something that we've been talking about for years. So we have invited a few people to talk about that who actually know the answers to these questions as much as you can have an answer. There is no one answer, there's multiple answers, but these people are here to help us work through it. I was having lunch with Paul Papenek, who is here with us, and it was his idea to make this happen, and I'm going to let him introduce himself in a minute. But we also have brought in Steve Bizenov and Mark Egan.
Egmon.
No, sorry, say that again.
Egmon,
Egmon,
E-G-M-O-N.
sorry.
Yeah, no worries. That's all right.
From Cast and Crew, and they pay people every day. This is what they do, and they can help us sort of maneuver our ways through it. So I'm going to talk briefly about WhereSpot, and then I'm going to get off this and let them take over. WhereSpot, as most of you probably know here, is the internet community for prisoners of advertising and production. We are here for 25 years. Perry and I started this. We have with us also Jonathan Shipman, I think, is on this Zoom, who helps us out as well. And WhereSpot is a community. WhereSpot is a community that has been around to help people figure out their production issues. Simple as who shot a commercial, where can I get a helicopter pilot in Alaska? All these questions you can get answered really quickly, really well, with people who know what they're doing, vetted members of a community of over 20,000 people. So welcome to those of you who are here. Thank you for joining us. And I am now going to turn it over quickly to Paul. Paul, can you introduce yourself, and then have Steve and Mark introduce themselves, and then they'll start the presentation. Thank you, guys.
Thanks,
And
Michael. Thanks.
hold on a second. I'm going to stop sharing this. I should have stopped sharing that earlier. By the way, this is me, if you didn't see me before. Thank you, guys. Again, I'm going to let you jump on in. Paul.
Well, thanks, Michael, for the introduction. And thank you, Michael and Perry, for putting this together. I've been a producer since the mid-'80s, a line producer. I also did a stint, a 5-year stint as a production consultant. And this is an issue that even outside of WhereSpot, I've seen come up time and time and time again. Specifically on WhereSpot, though, as Michael said, it tends to come up about every 3 weeks, and people tend to really defend their positions religiously. And there are so many competing points of view that we thought it would be really beneficial for the community to bring on some experts. And as Michael mentioned, we have Steve and Mark from Cast and Crew. These guys are the experts. They know the difference between independent contractor and employee and freelancer. This is a new world we live in, with all the rules and ordinances and laws between California and the IRS. So I think without further ado, let's turn it over to, let's have Mark and Steve introduce themselves, and then we can get started.
All right.
You bet. Hello, everybody. I am going to share the screen because I want to make sure we are good to go. If somebody can confirm that you all are seeing it in full view.
We have the first slide.
Yep.
We're
You're
good.
there.
Okay, we're good. All right. So thank you, everyone, for attending. Thanks to WheresSpot for allowing us to be guests today. My name is, I'll put up our little disclaimer slide here. My name is Mark Egmon. I am the Vice President of Business Development and Sales Operations in the advertising division of Cast and Crew. And I am not a lawyer, which somewhere in these paragraph, it does say that. Neither Steve or I are attorneys. So with that, my background actually is in production. I came up producing commercials in both for production companies and for ad agencies. I'm based here in Chicago. So I produced in St. Louis, Chicago, and would travel around in various locations to do that. Prior to that, I was in locations and assistant directing. So I have before entering this part of the business, I certainly had a substantial production background and can certainly speak to that. And with that, I will turn it over to my colleague, Steve.
Thank you, Mark. And I'm Steve Bizenov. I'm with also Cast and Crew, formerly CAPS, and many of you might remember I'm also with Media Services. And I've been doing payroll for over 30 years, which is crazy to think. And I also was in production before that. A lot of people don't remember those days when I was at Screen Gems. So I started way back in production. So I've seen both sides of it and seen the evolution of the question of independent contractors from, as Perry said, the 80s. And it's when I started in the industry all the way till now. So it's been a lot of changes. Perry, Paul, and Mark have been payroll clients of mine for years, over the years. So I've worked with a lot of you guys. So let's get into the slideshow, and we'll talk about a lot of hopefully not too boring issues. So first, we'll talk about the employer and how they're defined. All right, because you have to think about that in the whole independent contractor question. There's two employers really when you're dealing with a production company who's hiring crew. You have the common law employer, which is the production. So a lot of people don't realize there's still an employer relationship for the production company, even if they're working with a payroll service. So there's a common law employer. Then you also have the employer of record, which is the term most people are used to, or the statutory employer is another way that the payroll company is defined. All right. So the common law employer is the company who has control of the crew. All right. Even though you're using a payroll service and they're paying, you're still hiring the crew wherever you're shooting. Okay. And you control the workers. Okay. What they're doing, when they're coming to set. And you control, as the common law employee, you control the crew. Okay. And honestly, and we'll talk about this. One of the things I say, you control the crew. If you're on a call sheet, okay, you're really an employee. All right. So we'll talk more in more detail about that. All right. Let's go next slide.
Oh, getting there.
All right. So you have the common law employer obligations. All right. So you need to worry about wage and hour law. You know, still these days, most people make flat deals when they're hiring crew. Technically, that's illegal. All right. Everybody does it. Everybody budgets that way. I'm involved in showbiz budgeting, and I see all the budgets come through. And you're budgeting in flats. But when payroll is submitted, you need to worry about wage and hour laws. You need to break down the wages, and there's so much to talk about in relation to that in a whole nother seminar. I'm not going to go into the details of that, but there's a lot of issues in relation to that. And you got to worry about sick leave. You got to worry about timely payment. Okay. Um, that's especially in California. All right. We see the most timely payment claims come in California. Don't see that many, even though there are laws all over the place about it. We see the most timely payment issues in California. All right. You have to worry about full time employee benefits if you have full time staff. Obviously, most crew are not hired full time. Um, New York, and I think California has a paid family leave, and there are other states that have that. You have to worry about immigration compliance, especially these days. Um, so that, and there you're filling out the I-9s and making sure people are legal. Anti-sexual harassment training, New York and California has become issues, and equal pay regulations. Okay. All right. Then you have the employer of record or the statutory employer, which is usually the payroll service. All right. And they're doing all the remittances and all the withholdings, handling unemployment claims, which is a big issue. And we'll talk a little more about that. Covers the workers' comp. Now, you want to make sure if you're working for somebody that you're covered by workers' comp, and if going through a payroll service allows for that. And I'll be honest with you, and if you're ever working as an independent contractor, you want to make sure you're covered by workers' comp, because if you get hurt on the job, you want to make sure that there's coverage, or if you're the employer and you're taking that risk. W-2s are issued by the the employer of record, and also taking care of withholding of court mandates like child support and so forth. And if you're dealing with union, pension and welfare contributions are made on behalf of the client, all right, or the common law employer. Okay. Now, loan out corporations. Loan out corporations can be paid by production companies or by your employer, your payroll service. A loan out corporation is not an independent contractor. Okay. There is a difference with that. Okay. So if you're working under a loan out corporation, technically you're the employee of the loan out corporation. The loan out corporation is taking care of your wages. Okay. So you'll see a lot of, it's usually directors, DPs, producers. That's what we see the most loan out corps.
Right. And if I can jump in real quick,
Please do.
Steve, just real quick.
Yeah.
Essentially, it's usually someone at a higher level that Steve's talking about, whether it's a celebrity or a noted director or a DP, and they themselves have incorporated, right, as a S Corp or a C Corp. They can be an LLC paying taxes as a corporation, but they're an officer and, as Steve mentioned, considered an employee of their own corporation that is loaning out their services to your project, hence the name loan out. So that when you think of that and you're wondering, well, who's head of that corporation? The person you're hiring is, it's just sort of a structure in which they're working.
Right. And as Mark mentioned, C and S Corps, and also you'll see LLCs. So, and you want to make sure there's certain type of LLCs we cannot pay if it's organized as an individual. As Mark mentioned, if they're organized as a corporation or C or an S, then the LLC is valid. So that's where there's some confusion. We see people submit certain LLCs that we can't pay, and people are shocked. So we always make sure you want to double check on that. Okay. And then, so realistically, when you're paying a loan out corp, withholdings are not taken from them, and you're not paying the employer taxes, but the workers' comp coverage is there. And realistically, the two reasons you're going to put a loan out corp, because you could pay them direct, but you get workers' comp coverage, and if it's a union project, all the submissions are taken care of. Okay. All right. Next.
All right. Tests and definitions. There are going to be some, as we go through here, some of these tests that are going to be detailed. I won't dive deep into how that sausage is made because it can get probably beyond what you need to know as a rule of thumb, but we'll go through and give you a solid idea of sort of how the government, both state and federal, look at all of this.
And just one thing, you don't try to write all this down. If you want a copy of it, we will be glad to send you out a PDF.
Correct. So with regards to that, the independent contractor, there's, many definitions, but usually it's an unincorporated business that is, free of control. You're going to hear that as a recurring theme, and control comes in many different ways, which we'll touch on of what's considered control, but free of control of the hiring entity. That could be you as a production company. It could be the ad agency. It could be, any hiring entity that's directly involved in choosing that provider, if you will, of that service. And that service, is full in control of the manner in which they provide the service and when they do it and how they do it. That's sort of the thumbnail definition of an independent contractor. And a little bit of word about freelance. People often use freelance interchangeably with independent contractor. Independent contractor, employee, those are all very specific classification terms used by taxing authorities, whether it's the IRS or a state taxing entity. Freelance is not. Freelance is just a description of someone who is essentially a gig worker who is, they can be a W-2 employee, they can be incorporated, or an independent contractor, which we said is an unincorporated worker. Any of those who are just working from job to job and working as a gig. So it's kind of important to, when you're talking about freelance, that is not a official classification, governmental classification of which is looked at. So one of the things that you will see when we get into some of the tests is that there is some sort of signed agreement, which is one of the bullet points that will define a independent contractor. So oftentimes people will say, oh, so if I, want to be hired in my accountant, and oftentimes that's what's driving this. So, based on sort of what you're doing in your particular role in the industry, and you're working freelance, why don't we set you up as an LLC and you can operate as an independent contractor? And that may be fine and good from your accounting standpoint, but it may not be completely compliant with regards to labor law and how the governments look at this. So you'll have people who say, well, the person we're hiring, they signed an agreement that they consider themselves an independent contractor. That's not who makes that determination. The IRS, the state taxing authorities, they make that determination, not the person you're hiring. So they may want to be called that. They may, think of themselves as that. They may have even been encouraged to, create an LLC by their accountant. But when it gets down to it, some of the tests we talk about is going to make that determination, not the person you're hiring. Oftentimes a factor in determining how you want to pay somebody is cost savings. By doing it this way, we're sidestepping a lot of the extra, taxes that are required. We're just saving a lot, and we can just pay them. They're going to, on a day rate, and we're done. As Steve mentioned earlier, we'll start with insurance. If they don't carry their own workers' compensation, in some states or some cities, even like New York, you're required. It's a law to cover. If they're considered an employee, you must cover them with workers' compensation. So if you're misclassifying this individual and they're not covered, and there's a ripple effect to getting caught, one of those could be, especially if they're injured, they go to make a claim. You don't have workers' compensation insurance. Then they file it against your general liability. With your general liability, not only is it all the medical costs and everything that workers' compensation would cover, but then there's pain and suffering, and it can be quite costly, the claim, if it goes against your general liability. So workers' compensation really limits it to the injury, the medical expenses, and the disabilities are tied to all of that. And one thing that you should always keep in mind is what cues, how do people get caught? Typically, it's unemployment claims, because the people you're working for, as I said, are freelance. They're working gig to gig, and they might work for Michael one time, and Michael's paying them as an employee, and then they go to Paul, and Paul's like, that's fine, I'll pay you as an independent contractor. And then at some point, work is slow, they go to file for unemployment, and where have you worked? They're not thinking about that. They're just going to list everybody that they worked for, and when the state looks into that, they're going to look at Paul's company and say, we have no record of that person, that project ever existing or that employment ever happening. And then they begin to investigate, and that's when the wheels come off the classification train and you get caught.
It's not just the one person, it's everybody. So
right, because then they begin looking at everybody who's on the
Right.
shoot, and then it becomes a real pain. So what are the simple rules? Give us the thumbnail, we can wrap this presentation up, but there are none. There is not a bright line test. That's part of the problem. There are essentially 4 tests. I mean, we can certainly give you the Steve and Mark general list, which we will do at some point during this, but ultimately these 4 tests that you see here bullet pointed are used by state and federal governments to determine really if the individual that you have engaged is an employee or an independent contractor. So I'll touch on these and you'll see some common themes, but we won't dive deep into them, nor will I read all the bullets. Other than the common law test, you will see the right to control. Right to control is not just direction on set or telling them how to do their job, but I believe Steve mentioned earlier, if they're on a call sheet, meaning you're controlling when they show up, when they're released from the job, when they get to stop and have their lunch. If you exert any of those controls, it begins to suggest certainly that they're an employee. That's going to be one of the biggest factors when you're looking at what this person's going to do for you is, do I have that level of control? And you're putting them on a call sheet, you get to tell them all of that. You're probably dealing with an employee. A high level of skill required. Most of the time that's not always true with regards to, I shouldn't say that. It is true with regards to an independent contractor, but it is also true with a lot of people who are considered employees. A lot of people we work with in our industry who are considered employees also have a high level of skill. So what you're going to see is when you go through a lot of these, it gets a little confusing. You get to say like, well, it is high, so that DP can be paid as an independent contractor. Maybe, but probably not. Economic reality test. This is where they really take a look at a lot of the financial aspects. And one key thing to consider when you're even looking at the economic reality is there a chance of profit and loss by the person you're engaging? Meaning, if you hire somebody at a particular rate, hourly rate, for so much a day, that's what they get. You've engaged them for that, and that's what they get. If you're hiring an independent contractor and they quote you for the project that they can do it, if they're a true independent contractor, and Steve has an example he's going to give later of a prop maker, but we'll use a plumber who's going to come to your soundstage because you have an issue. If they come in and they say they're going to fix what they're going to fix, or they're going to create the prop that they're going to create for $10,000, and you sign an agreement for that, great. Now you've signed that agreement. If they've misjudged what the cost of materials are, if they really looked at all of this and through your creative brief, if it's a prop or their assessment of what your plumbing problem is, and they tell you it's going to be something, and then, oh, well, it's actually going to be more. This took more time. This took more whatever. That's really technically their problem. and they run a risk of loss, is what that really means. So that's something to consider when you're working with people in your businesses. Are they going to lose money, or can they decide to quit and you have a breach of contract? If you have a breach of contract, chances are they're an independent contractor if you legally can sue them. If not, they're probably an employee. If they can sit there and say, I'm letting you know I'm not coming back tomorrow, and you just have to deal with it and replace them. ABC test. Again, here's that control factor. Services outside the employee's usual business. So typically the people who you're engaging are contributing some aspect to what you do. That's one thing they look at is what they're doing directly related to what you do as a business. And one example, and Steve will, I believe it's on a slide Steve's going to present, but Steve, I'm going to steal it for a minute. The prop maker. It used to be a go-to example of in most states where you could use it because, you're not exerting a control, right? They're going to do what they're going to do. But California changed all that because mainly of this. They considered that prop maker, although they fit all the other criteria of, working when they want to work, they'll make the prop where they want to make it. They want to do it at midnight. If they want to source out part of that making of that prop to somebody else and pay them, that's all up to them. They just need to make it based on your creative brief and deliver it when they say they're going to deliver it per the terms. That usually was enough in the state of Illinois to say, yeah, they can be an independent contractor. You can pay them as such. Not so in the state of California. So that's where this really gets into the, state by state. IRS three-factor, guess what shows up again? The controls, right? It's all about control. The behavioral control, I think we've touched on where, some of those factor into some of the other tests. What is the relationship? Do you set the hours, which on a call sheet you do, call time, wrap time, all of it, any of these things that you look at typically apply to the people you're hiring mostly. Financial control, we've touched on that under the economic reality test. There's a lot of the same things that cross over under this test, which is, if you're reimbursing expenses, if that person really has no likelihood of losing money, you've hired them at the rate they are, and you've got to pay them at that rate. They have expenses, you've got, you pay them, you reimburse them for mileage, et cetera. They're likely an employee. And what is the relationship here? This is the last one that the ability to work to quit without penalty, true penalty, like suing them for breach of contract. If you can do that, you're likely an employee. You usually can't sue your employees for quitting on you. That these are all the things you kind of look at. And like as Steve said, you don't have to write this down. You'll look at the bullets and you'll start to waver like, well, these two apply, but this one doesn't. You sort of have to look at all of this in totality. And, towards the end, as we delve into this a little bit more, we'll kind of go into what we usually tell folks as a rule of thumb. Although in the official world of state and federal government, like we said, there's no bright line test, but there's usually a general guidepost of what you can do to make that determination. And with that, I'll turn it over to Steve to talk a little bit more about this.
Independent contractors. So the first line, of course, is about our famous prop maker. And we talked about this already. The prop maker is working on their own. And I have clients ask all the time, what do you think? And it's usually somebody who, like a prop maker, another common one, people working on maybe a script or something and just delivering it on their own time, and they're not under control, okay? Not told when to work on the not made on the employer's premises. So it's really about independence, and they can do whatever they want. They have their own business. And some of the factors, as Mark said, might not always fit, but there's some consistency on that. All right, so let's
Right.
next slide.
Sure. Oh, did I? Okay, we're still
Yeah, that's
going.
fine. So now this slide, I'm not really going to go into in detail. You'll notice this is the Department of Labor implemented some rules in January 2024 on a federal level. This was done by the Biden administration, and of course, the current administration is looking to wipe these rules out again. And I read the Department of Labor is already looking at changing them back. So these imminently will change. So I'm not going to really go into detail on these, but a lot of the laws are going to they're similar to what the states are doing, but just be aware the federal independent contractor laws are going to change. And they said within the next month they'll probably change again. So that's why I don't want to really drill into these, because they probably won't be fully true anymore. So just be aware of that. Employer exposure, you have exposure with the IRS, employer and employee shares of taxes. Then you have state taxation. And as Mark said earlier, I've seen more claims come out of the state with the state unemployment and the workers' comp. That's what we see the most of. But obviously, IRS can, Federal Department of Labor, minimum wage and overtime. That's an issue as well. State Department of Labor for minimum wage and overtime. And in New York and California and a couple other states, you have the WTPA forms, which were implemented a bunch of years ago to watch out for the minimum wage and overtime. It's just more paper to deal with. And also, Affordable Care Act, potential penalties due to underreporting. So if you're an employer and you're not reporting, and if you're high enough, in the count of official employees that you have, you can get caught on that law as well. Okay, next. Risks. And I said when we were talking about this, is no way we will have a list of all the laws that we have to keep track of, but about 30 states have specific misclassification penalties. California has the 5,000 to 15,000 per misclassified worker paid as a 1099. And it gets expensive. We've seen different claims against clients. It can get expensive. So you want to try to avoid and follow the rules. And depending on the states you're in, you want to be aware of what the regulations are. Connecticut's 300 per employee for each day worked. Virginia's 250. So you see there is a variety of rules depending on where you're working. And Massachusetts, civil and criminal penalties up to 40K and 1 year in jail. So it can get messy. So next. Wage theft, the other classification. As I said, in New York and California, you'll be familiar with the wage theft forms, failure to apply exemptions properly. Okay. And that's honestly, you're dealing with hourly employees, or there are exempt employees where you can pay flats. Again, that's a whole nother seminar, but you'll need to be aware of that. Failure to pay overtime, that's an important thing. And realistically, in our industry, as I said, they're budgeting flats, but you need to watch the laws. For example, like California pays overtime after 8 hours per day, where many of the other states are 40 hours per week. So the regulations do vary, but you need to process the payroll properly and show it accurately. And another thing that's coming up more and more is failure to pay minimum wage, especially on low budget projects. As minimum wage is increasing all over the country, even though the federal minimum wage has been stuck at 7.25, I think, per hour, but most states are moving up and past the $15 per hour. On these low budget projects, you got to make sure you're paying at least minimum wage. Um, and then you have failure to pay in a timely manner. And that's especially in California. You have timely payment issues. So just be careful. I've seen the most claims out of California. I think Mark would agree.
Mhm. Oh, yeah, for
And
sure.
then failure to pay at all. And that's honestly dealing with an issue right now with a client who's not able to pay, and everybody's going after lawsuits. So you want to make sure.
Right. And I mean, sometimes it's a situation where, well, we have a PSA or we have something you you really can't engage people and have them volunteer uh, their time. They have to be, as Steve said, pay a minimum wage. Make sure, because that also, again, if you're running it, through a company like ours, it gives you the workers' compensation. Because, if you're not paying them, even if it's sort of an agreed upon, well, this is for a good cause and we're doing it like this, and it's a small, whatever it is, it's a spec spot, however you want to go, and then they still get injured, you have no wages to claim against, right? It's a ripple effect. So there's more to it than, you've hired somebody and then you just are negligent and don't pay them. Sometimes the intention's good for whatever reason, right? They agree, you agree, but you're exposed. You go, Steve.
All right. And th- this is talking about the AB5 laws that went into effect in California a few years ago, which has made it a lot tougher. And actually, it really documents the law. It's a lot more clear in California, even though it makes it sort of impossible to pay independent contractors in our industry for the most part. So you have the ABC rules. The worker is free from control and direction. That worker performs work that's outside the usual core of the hiring entity, and that worker is customarily engaged as independently established trade occupation. So those are the factors that can make an independent contractor. And as a result of that rule, the ICP was making sure to recommend to their clients that they're following the independent contractor rules. And again, especially in California, because it was codified into the law and people know. That's the problem with a lot of the independent contractor around the rest of the country. There are rules, but they're not totally clear cut. California has made it, I think, the clearest out of all the states. So people know what they're dealing with at least. Other
Yeah.
states, it's less clear, I think, but the rules are still there. So you need to
Right.
just be aware.
And the penalties are very clear in California as well, and often uh, the hardest ones to deal with. So some general best practices. So when in doubt, if you're not really sure, pay them as a W-2. Just pay the person as a W-2. And the one thing that's not on here, but we've talked about many, many times, is you also know that you're getting workers' comp coverage when you're paying them, at least through an EOR and going that route. You're getting workers' comp coverage, and that will save a, no pun intended, but world of hurt when that takes place, because we've seen situations, just an example, a assistant director who's responsible for the safety on a set was shooting for a motorcycle company, and the camera was in a dune buggy type car, and they jumped in and everybody else was strapped in, and ironically the individual who's responsible for the safety on the set did not, and the car flipped and resulted in injuries, and then lawsuits. It just then they were unable to work, and if you didn't have workers' compensation, which is bad enough, imagine that person's pain and suffering if they are young and they're going to claim they can't work forever and ever. Wage and hour regulations, we've talked about this as well. This is when you're exempt, and day rate only really covers 8 hours. California, again, rest breaks, you really have to go by when we talked about the wage theft protection in those forms. That's really created by, those state governments, New York, California, I believe Minnesota is at Minneapolis, Steve. I think a city is in on that, and there's more and more of those. They're like deal memos. And the states are making sure that in writing, everybody knows what they're getting paid when they go into overtime, et cetera. So, you really need to follow that. And, oftentimes companies like ours can certainly help guide you through some of those more tricky and complicated situations. Poster notice requirements. Technically, these are required. So take a look, see what, whatever state you're in, what are some of the things that need to be posted, and, make sure they're in Video Village or wherever else they need, might be the easiest way for all the crew, craft service, somewhere in there that there's just some notification that, you can look. I don't know how often somebody gets nabbed on this, but as a best practice, it doesn't hurt to have them up. Certainly required to have them up, and it will save you from, as we are in a very litigious society, should something go awry and they ask, did you post, the person was felt sexually harassed on your set, did you have anything posted as required by state law? And you're like, no, it just only adds to the problems that you may have. Payroll due dates and late claims. Here are many examples, and California again being the most stringent when it comes to timely payment. And while there is the motion picture exemption in California, make sure that you have clear times when your staff is paid and you've set pay dates. And then that way you can follow and use that as your guidepost. So when you're paying your freelancers, you don't, it's within a certain amount of time, within, as we recommend, maybe perhaps even 7 days from when you pay your staff. But you really don't ever want to go, what Steve, we usually say, never go past 14 days from when you.
14 days, yeah.
Yeah, to really try to keep it within that time of when you would pay your staff employees.
Yep.
And with that, we wanted to make sure we left plenty of time for question and answer. You will have our contact information here.
And feel free to email any questions if that you might remember after, or
right.
if you want a PDF of the presentation, you're welcome to request that as well.
So
sure.
I've stopped sharing, just so you know, we can now see your faces.
So right off the bat, thank you both. My question to start the Q&A part would be, the presentation was great and informative. A lot of people here are not company owners. They are crew members.
Mm-hmm.
And it would be great to hear your perspectives about the risks crew members take from misclassifying themselves on a shoot, on a project. We know what the risks are to the employer, but what are the risks to crew members? Because that's an ongoing discussion on WheresSpot. Well, I always, I'm an independent contractor. I've never had a problem, that sort of thing. So
well, typically it's the employer who's going to get penalized with penalties for misclassifying. The issues, I think, and Mark, feel free to correct me if you disagree, is the crew. First of all, you want to make sure if you're going to get hurt that you're being covered by workers' comp, by whoever you're working for. Now, there are crew members who say they're independent contractors, and the production company doesn't have workers' comp and the crew member. So what happens if they get hurt? So that's a problem, I would say, if there's an injury. Okay. And then we saw
before you go on, can those crew members have their own workers' comp policy and cover themselves that way?
Well, Yeah, they can, but it gets expensive. And that's like I have clients, especially who come from Europe, who come to us a lot because they want to make sure they have workers' comp coverage. It's hard for them to get. Now, they do hire some freelancers who have their own workers' comp, and then they just pay them as independent contractors as an international company. So we do run into that a lot. But the expense of it sometimes becomes prohibitive, especially if you're not working 100% of the year. So,
Right.
and then also unemployment, and we saw the issues with unemployment. If you don't have that, like during COVID, though the government got a little lax with that, you don't have that type of coverage either. So those aren't penalties, but it's just obviously what you miss out on.
Right. Ultimately, yeah, like the main risk is with the employer, but as Steve says, there's other aspects. Do you want me to answer some of these that are in the chat about a little bit more about loan outs and discussing some things
Sure,
there?
that's one of
Yeah,
my questions. So yes,
could
absolutely.
I just add some?
Unless Paul has
No, I
more
was just
follow-
going to say Kimberly has some three great questions.
Okay,
I see
let's
those.
let's start with the loan out and those. Yeah, I have those as well.
Well, I guess I want to say too, just out there, is that a lot of people I know, it's not just or generally, as far as my job as a line producer and a PM, everybody is starting to prefer to be a loan out because they don't want. I'm not the production company. You know what I mean? It's like I want to honor it. We want to take their job, but even payroll companies are starting to determine what tax rate you're being taken out. Like people want to just be like, let me just take care of myself. And what if they have, what's the difference between if I'm going to be a loan out, and what's the difference between workers' compensation for me and my health insurance? You know, if I am covered by my own health insurance and I'm willing to take that risk, can I still, you know what I mean? If I'm a loan out, are you saying that I can still sue the production company because, you know, if I do get hurt? And I believe in workers' comp. I don't do jobs with any company that doesn't have production insurance.
Right.
But I guess I'm just talking from a crew perspective. Everybody's getting a little, you know,
Right. Well, as you know, I mean, oftentimes, there's deductibles on your health insurance. I mean, if you think of, you know, there's so many factors to.
It's their choice, though. If that's the way they want to do it, I don't care. I just want to know what's legal and you know what I mean? Like,
Right.
Like, yeah. So
from a loan out, anyone can create their own loan, be their own loan out corporation. We said S Corp, C Corp, or an LLC taxed as a corporation. Oftentimes you'll hear Steve or I might be a little loose with the we can't pay. Well, we can technically write a check to anybody. We don't pay LLCs as individuals because the government applies those tests that we just showed you on to see if they're an employee. They apply those same tests to anyone that's taxed as an individual. So if you say you're an LLC and you want to be a loan out, we typically won't pay anyone as that in a loan out. So how you structure your loan out, you certainly can, but how you structure it matters.
People are doing the S Corps. That's, because then there are other payroll companies that are requiring that. And to your point too, is there are some production companies that will say only the DP, the PM, and the LP can be a loan out. Like they will say stuff like that, which then that's not your problem, but people will also argue like it's my choice. Why isn't it my choice kind of thing? So
Right, but as a line producer too, you want to limit the exposure that the production company might suffer.
So it is for those purposes, yes.
Yeah, by employing
misclassifying
and misclassifying, right?
Right. So
what I'm hearing basically, if I can sort of cut to the chase on this, is that if it's a S Corp or a C Corp and it's a loan out, they are covered by, if they're getting paid through you, they're getting paid, they will be covered for workers' comp.
Right.
Yeah.
What if they're being paid just on invoice?
then
Can-
they wouldn't be coming through the payroll service.
Right.
So obviously
That'd
they
be a
would be
1099.
covered.
Yeah.
Right. So you would have to have your own workers' comp. Some product companies do have a limited workers' comp policy that would cover in that scenario because they know they do that. Or sometimes they have interns and they want to cover them as well because they would not be covered under our workers' comp either. So that's one of the reasons a production company will have a small workers' comp policy.
Got it. And in that case, if somebody comes to you and says, I want to be a loan out, pay me, I want to invoice you, you can turn to them and say, well, I need proof of your workers' comp.
Exactly. Exactly. That's what I always tell the production companies to do.
Okay.
And really quickly, am I still sharing? Somebody asked to see the slide with
No, you're not sharing anymore, no.
Oh, I'm gonna do that really quickly
Okay.
so people can get our contact information. And we can go on to the next question, Steve, if you want to
Okay.
field
let us-
that.
I have a question as we're looking at other questions. What about when you're working, a lot of productions, you're moving locations, you're going from state to state, you're working here, there. Does that change anything about any of this conversation? In other words, so I'm a California guy, I get hired I'm a DP or even a grip or whatever, and I'm now traveling to Arizona and then to Texas, and we're going all over the place. How does that change my employment status at all?
Well, it changes how it's really how the payroll service will charge the production company, because the state unemployment tax will be charged based on state of shoot. Though California employees traveling around, you pay a portion of the local, and the difference is paid to California. It's one of the states, and I'll be honest, I don't know the total way they get away with that, but
Yeah.
That's why
able to-
production department fills out the time cards for the crew.
Right.
You know, with where you're shooting, what your zip code
right,
is.
because you notate on the
Yeah.
time card,
We're gonna pick
day
one,
one is
and
in
that's
LA,
what we're
day two
gonna-
is in Florida.
Yeah.
So you break it that way, and it just changes the taxation.
Yeah.
Right. So Michael, to your point about your employment status, that doesn't change. Sort of the rules apply to, those are the rules you kind of used in any state you're working at. But as Steve's saying, it then, impacts, your workers' comp and some of those other aspects that we figure out and program in and do all the hard math for you. And
Great.
it really,
And
it really impacts the production company. I'm sorry, what?
Great. And if I live in Arizona, but I work in California, same thing, and it doesn't change my workers' comp issues or any of that kind of thing?
Well, you have to pay two taxes though. Like if people are going to be that's happening.
Well, you don't
Is
pay
that you're gonna-
double. You don't pay double. You pay, let's say you're California and go in Arizona, you'll pay the portion of Arizona,
Right.
and the difference, because California I think is higher, will go to California. So
Just like the amount that I made in that one state on that one time
Right,
card,
right.
but meaning look out for more than one form for different states.
Right,
Accountant need to know. Yeah.
But if I'm like a loan out corporation and I have workers' comp, then would it make any difference? to
it's
say-
it's not in relation to us. That becomes your problem because you're
Right.
taking care of your own taxes.
Got it.
And what about if a California company comes to Atlanta, Georgia to do the whole shoot? Like the whole thing is there. It's an Atlanta job as a location. Then again,
And
which rules? Then it's still California
Well,
rules.
if it's all Georgia crew members, it's all charged as Georgia. California has no bearing on it because everything's done there in relation to the employees.
Even if you're a California incorporated production company, the California rules don't follow you to another state?
Not for the because they're local employees. I'm not talking about corporate taxes. I'm just talking about employee
Right,
taxes.
right. Me too.
Right.
Yeah.
Yeah.
Yeah, this is partially, these are, you see how everything sort of melds in between taxes and employee status.
Yeah.
they're two separate issues. We'll have to have another one of these with an accountant because
Right,
It's
that's a
also
whole.
production company perspective versus like crew perspective and what it means. That's also a,
Right.
you know, and sometimes again, we're not always privy. And what about the difference between a production company and like production service company? If I was an S Corp in Georgia, because it helps some companies out that I can just, it's a small job, 20 people, and I'm just going to help them out by paying my one invoice. And I would absolutely have production insurance with workers' comp for sure. Is there any, I know people do that too locally, at least in the South, just because it helps kind of keep money coming. Is there something,
Well,
is,
if
is
you're
that
saying that
the same?
you're,
Is it still a production company? Is there a difference between is
that,
MJZ and Kim
that
Carey's little production service company?
you would still be hiring us to do the payroll, so it does.
Yes.
There's zero effect in relation to that.
Yeah,
Okay.
from a governmental standpoint, it's who's the common law employer if you're, responsible for that. They don't get into the slicing of our nuanced categorizations of,
Okay. Yeah,
right?
I'm
The
looking for
government just,
loopholes. Looking for
right,
loopholes. Okay.
right,
Right. And if I
Yeah.
can sort of splice through that too, basically what you're saying is I'm a production company, but I'm hiring a production service in Atlanta and I'm writing them one check for 100,000 saying you take care of everything. It's really their job.
Right.
correct.
And
Then
again,
they
sometimes
have
They're
it
to,
our
would be
client.
direct to client who isn't properly set up internally, maybe. You know what I mean? So it's easier if they just pay all the same factors. It would look the same to you guys, but for them, it's just like they don't have an internal way to pay someone
Right.
outside of their proper, like,
right,
payrolls, internal payroll. So it helps them. So it's
Right.
just seeing if there's any differences
Yeah,
to,
but you wouldn't be able to pay any of that crew if you did that.
it
You
would
couldn't
most likely
step.
be a 1099 situation, or I would, depending on the size, then I would go through, a payroll company just to be honest, just to be,
right,
totally on the up and up
Yeah.
kind of thing. Yeah, I might.
right.
But I would bid it that way, and I would bid it that way, depending on what we're actually doing. But yeah.
Did
Yeah,
you
I
have a
just
point?
did the same thing. I did that very thing on a big project that shot in China and then two locations in California for a company that is not a production company.
Right.
And we just hired production services wherever we went.
And so each of those services again, I kind of knew the answer. I just was wondering
Yeah.
if we would be a little thing on one piece of Paul's job when Paul, everyone's going to have Paul's name all over the world. So if there's a problem, they know who to come to, but like the little guy in Atlanta, that little piece of it, if you could catch that work, that's again, everyone's looking for different ways to get creative and keep work coming.
Yeah,
Yeah.
we
So I
have a
just didn't
lot of
realize it.
freelance producers who always pick up
Right.
jobs from bigger.
Right. Photo shoots and stuff,
Yeah.
yeah, different. Yeah. So, okay. I appreciate that.
Yeah. Brendan, did you have a question? I couldn't tell.
Yeah, I appreciate it, and good seeing you, Steve.
Good seeing you,
And
brother.
I will give a plug to Steve's company. I've worked with him on multiple jobs, and it's worth every dollar. But I did
Yeah.
want
I
to
didn't
add
pay him for that. Thank you.
I did want to add a couple of key points, having lived on all sides of this, and also taken a lot of flack in the WheresSpot community for actually trying to do things correctly. So
Sorry
I
about
just
that.
like to qualify a few
Everybody
things
hates me too.
for my
Me
own
too.
personal experience. So I'm a writer, director, producer, but I also own and run a production company which is based in New York called Digital 7. And I've employed and done jobs all over the country. And I'm also a line producer, and I've seen the practical aspects of this, and then I've seen, the business aspects, the real world situations and different things. So I wanted to just run through a couple of quick points, which was one, with the workers' comp. I have workers' comp for my own company. However, the workers' comp does not cover the owner of the company. It'll cover all the employees, but it does not cover the owner. So if I want to go and get hired as an individual and theoretically use my own company, that's something that, I just want to put that out there and table that for a second. The second thing is I've ran into many situations, and I believe, Kimberly, you brought this up, and possibly somebody else, which is where you're doing the initial contract for the hiring, but the actual work is performed in another area, right? There's that element. And a big red flag, probably the one that got me into the WheresSpot abyss with everybody, is kit fees and reimbursements, right? And
Thank
so
you.
I actually posted a post on WhereSpot, which was from Media Services, and I ended up getting scorched because I brought this out, and I had all these guys, particularly sound guys and independent vendors, who feel that this is, should be done a different way, or they're threatened a certain way. And I'm not here to dismiss what anybody else is doing, but as an employer, we have to go by a different set of criteria and also be held accountable to things that the average person just doesn't take into account, right?
Production is
And so
not a regular Department of Labor staff corporation. It's not. It has
right,
its own way of working.
right. So what I would love to do is to be able to touch a little bit about kit fees and reimbursements without derailing the conversation. And then the last thing is that with respect to loan outs, right? And actors, and having worked with, different productions on a bunch of different things, are you also qualifying the point that the loan out has to be registered in the state in which it's doing business in? Because a lot of times, a lot of people are like, well, I got my Delaware corporation or my Nevada corporation. And they think they can work anywhere under any situation and do whatever they're doing. And they're also living in New York, right? So they're not even registered to do business in New York. So if you could just share a little bit about that, I appreciate everybody's attention on this.
You do have to be, if you're a loan out corp, you do have to be in most states, and I can't speak for all states. I don't know, Mark, if you have all 50 memorized, but most of the states you have to be registered for in those states to work. They don't have to be registered as an LLC or a corp in that state, but registered to do business in the states that they're working in.
So if you're an actor being a loan out and you live in LA, but you're shooting in Atlanta, you need to be registered in Atlanta in order to
do business.
It could be a Delaware corporation, a California corporation, but it would have to be registered in Georgia. And especially these days, it has become more important. And it's another issue, totally different, with tax incentives.
Tax credit.
Right. I'm just going to say the same thing. Yeah.
But that is totally different. But you're sick because I live in Atlanta now. I'm from New York. I've lived in LA and whatever, but I'm based in Atlanta, Georgia now. Most of my clients come from LA or New York. So you're saying that even those, again, MJZ, one of the, them, Radical Media, has to be registered in Georgia in order to do business at all and hire me at all?
No. It is to pay the corporation, an LLC.
A loan out in Georgia.
Yeah.
See, I'm confused. I don't get that. So an LA company hires Kim Carey, who's a S corp in Georgia, and they're hiring me to produce their job.
Right.
Then what is that?
So theoretically, what he's saying is that you would actually be registered to do business in that state.
Business. You don't have to be
just to do business in the state.
It doesn't have to be a native Georgia corporation. It just has to be registered to do business there.
Oh, of course. For instance, I'm trying to find Brenda's answer. I'm trying to,
So I'm gonna give you the answer, having gone through this the hard way. So, for instance, because I've been audited and I've been through a bunch of shit. And if anybody wants to hire me, I'm ready to go. So I'm just putting that out there. But for instance, like New York and New Jersey, there's a lot of reciprocity. But if you want to get somebody to qualify for the state tax credit or do things through Media Services. And the one thing that I will say as a plug to Media Services, and I'm not just blowing smoke up everybody's ass, I've worked with these guys, and I've also worked with everybody under the sun who will tell you the story and, whatever. The thing with Media Services, they won't even process your paperwork if you're not dotting the dots and crossing the T's. So if you're going to go do a job in New Jersey as, your Kimberly Carey LLC, all you're doing is going to the Secretary of State and say, I'd like to register to do business here. And that's it. And you're filing whatever you do. You might not do any business there. But if you do business there, then you're just going to only deal with the applicable employment aspects of whatever that job was in New Jersey, but you would be completely on the up and up because you said to the state, I'd like to work and do business here. Does that make sense?
It does, except that I don't want to do that if I'm only going to be there a week or two throughout a year. Like that's where I was trying to, I thought that's what you were saying. It's like I will do that if
I
have
can
to,
be the loan out for you if that helps you.
Oh,
Right.
right, but right.
Yeah.
That's what I'm saying is like that's what people come to Atlanta
Yeah.
or the South for. I will be the loan
Right.
out.
Well, that's
Right.
I mean, I'll stop this discussion
I think
because
we
it's you
covered
can
it.
do
Yeah, okay, I'm sorry.
you can do whatever you want, but he's saying the right way to do it is this. It
Right.
doesn't mean that everybody does. Okay, I'm going to ask the question about kits because that does come up a lot. So people come in, they say, okay, pay me $500 a day, and I'll bring my audio equipment or my camera or do whatever. So what is there a difference?
And they are incorporated. They are LLCs or S corps because they own their gear and they're bringing the package that I asked to for my job. And they always want sound and VTR and DITs or all have S corps because they have so much gear.
Well,
and
if
so
they're an S
expensive.
corp, it's one thing because that's a pretty, I think you can say, well, but maybe not because they're still an employee. If they're coming in
Their
and they're doing
labor,
work,
right? There's
their
labor, and then
labor
there's their
part, right?
kit.
So
Yes,
how do you deal with stuff like that, Steve?
Well, we'll pay kits
Brandon.
for
Yeah.
people, and as long as and we're basically only charging a handling fee. There's no taxes or anything on that. So as long as the appropriate paperwork is filled out, and sort of it's like a reimbursement. So it's just we pay the kit plus a handling fee. No taxes, no workers' comp. So it's really now you could pay that on your own. But a lot of people want it all just consolidated.
The
So
production companies are super nervous about putting anything that's labor related on they will insist on payroll, even though they're
yeah, it's
Go,
easy
Brendan.
from
I
a
hijacked
tapping
your question.
standpoint.
Sorry.
So there's no added. It's just the
So
handling fee.
I would give you the real world workaround from somebody who has to deal with a lot of pain in the ass crew and also balance the thing. And that is if you have somebody that is just completely totally difficult to deal with, in my view, and Steve, you can correct me if I'm wrong, you could pay them the legal minimum wage and pay them the kit fee however you want to pay that
PO.
kit fee.
It goes on they want to be on a PO. They want to be on a PO, but production companies, due to their fear of labor laws, keep insisting. And so again, I'm in the middle and I'm just trying to figure out, yeah.
So you take your $500, you say, okay, you're working, it's $15 an hour is minimum wage. We'll pay you, $100 for the day.
$16.50.
Yeah, so 1650. And who's counting, right? 1650.
Those were the old days.
Exactly. In the old days, I'm like, yeah. Anyway, yeah, so you can put the minimum, say, I got to pay you because I got to cover your workers' comp. I got to do all this.
So
I got to
do a
pay
time
you.
card for $16.50 as a portion, right?
And the rest can be your kit fee.
But it is going to include, and we just put some of the balance of the labor. Is that is that what we're saying? Are we showing me how to cheat right now? I was just
Not
asking.
cheating.
No,
He's
so
not
you're,
cheating.
you're showing a legal workaround.
I appreciate
but
it, but I'm just, yeah.
you're
I'm
showing a
just,
legal workaround, but the problem is the bigger question is the sound guy who says that he's an independent contractor when he's taking direction and he's being given a call time and he's being done all these other things and he's working for a much bigger company. The problem that we face a lot is we're hired by an even bigger company to do the work, and that paperwork has to be turned over to them. And oftentimes they may be the one dealing with the payroll company directly, and you're just facilitating the job. So there's a lot of things that get commingled in this that it's not an easy fix.
yeah.
Yeah, a lot of times it's scenario based, depending on,
Yep.
when it comes in, it's like we always ask, give us the details of what the situation is. But
the good thing about having a payroll company, and I'll give the plug to these guys, is that you can then turn around to that person and say, listen, my payroll company won't pay you unless we do it this way.
right.
You can't get paid. I can't pay you. My company I'm working for, Microsoft, and they make me work with this company, and my company says I can't pay you unless you do it this way. It's, that's how I've gotten around some of those issues with crew that only want to be paid that one way. It's like I can't do that. I'm gonna ask if we have any more questions. We've gone a little bit over time, and this has been great, and I think that you guys have really answered a lot of questions.
Yeah.
It doesn't answer everybody's, right? It's not gonna solve all of our questions. It's not gonna answer all the questions because, as they said, every state's a little bit different. Every place is a little bit different, and every circumstance is a little bit different. And if you have one guy who you need to pay, and you go, oh, if I get caught with this, it's going to cost me. This is my penalty is long. But you could get audited now. It could take you a lot of time, energy. So you don't really want to mess with this stuff. I've watched friends' companies be audited for payroll issues.
Not pretty.
It's not pretty. It's expensive, both because they always get fined, by the way. Those are expensive, but it also took them hours and hours and hours going through every single one of these pieces of paperwork. And as we know in production, there's tons of paperwork, and they'll ask for all of it, and they will they'll break you eventually, and they'll take a long time, and you'll spend a lot of effort.
They'll break you.
They will break you.
They want to break you. They want to.
And I
You've
will
seen
say
those-
this too, having been audited twice, you also have the state that comes after the federal government too. So and I got to just say, like, if you have a choice to use media services, use media services. Like, it's worth it completely. If other payroll companies do exist, but the thing that they do is this is what they do, and they're in every state.
Right. And thank you, Brendan. You can see it on his face. He's got pain there, and he's been there. No, now that's the happy one. That's what I want.
And if you're a company owner and you use media services, you get what is inarguably the best bidding piece of software ever invented.
Thank you, Paul. Thanks for the pitch.
Yeah.
Okay. Anybody else? Perry, is there anything that we missed?
Where is Perry? Where did he
Oh,
go?
Perry had to dump off. I have to see his message here. So I think we got it, guys. Thank you very much. Again, Steve and Mark, thank you very much. You did an incredible job. And Paul, you're a great producer, and by pushing us, you got answers. So thank you very much. I really appreciate it. And I think they Steve or Mark put their email on the screen if you want a copy of their slides. And also, by the way, I am recording this, it will also go up. So if you need more information, you can get it that way. And please reach out to Cast and Crew. They do a great job. Okay.
They do.
Great.
Guys.
Thank
you,
you.
Steve.
so
Thank you,
much.
Mark. Thanks,
All right, take
everybody,
care.
for
Nice meeting you all.
coming on.
You're
All right,
welcome.
take care.
Thank you,
Bye.
guys.